Picture this. A massive cargo ship arrives at an Indian port. It's loaded with thousands of tons of coal, limestone, or iron ore. But how does all that heavy cargo get from the ship to the factories that need it? That's where Shreeji Shipping Global Ltd comes in. They don't just move goods, they move the building blocks of India's economy. From power plants to cement factories, from steel industries to FMCG companies, Shreeji plays a silent yet crucial role. In this video, let's explore their business model, financial journey, the big IPO story, and their future growth potential. Shreeji isn't your average shipping company. They're an end-to-end logistics partner for industries that deal with bulk cargo. What does that mean? Here's how Shreeji Shipping Global Ltd works. First, ship-to-ship transfers. When huge cargo vessels can't dock at smaller ports, Shreeji transfers the goods at sea using barges and floating cranes. Second, barging and mini bulk carriers, where they move this cargo closer to land or smaller docks. Third is tugboats and cranes, where tugboats guide ships safely, while cranes unload and load efficiently. And finally, trucking and equipment, where trucks and heavy machinery transport goods right to the factory gate. It's like a relay race. From ship to port to warehouse to factory, Shreeji is there at every step. Shreeji mainly deals with bulk goods, the kind of heavy raw materials that industries need in huge quantities. Think of coal that powers electricity plants, limestone and clinker used to make cement, salt for food and chemicals, iron ore for steel, pet coke and sulfur for energy and industrial use. In short, if it's heavy, dusty, and comes in shiploads, Shreeji is probably the one moving it from the port to the factory. Now, let's talk about money. In FY23, Shreeji clocked 827 crore rupees in revenue. But by FY25, revenue fell to around 610 crore rupees. On the surface, that looks like a slowdown. But here's the twist: profits didn't fall. In fact, they rose. Profit after tax went up from 124 crore rupees in FY24 to 141 crore rupees in FY25. How is that possible? By becoming more efficient. Better cost control, smart use of assets, and operational discipline meant that even though they sold less, they earned more. In FY25, their EBITDA margin is around 33% and their net profit margin stands at a healthy 23%. That means for every 100 rupees earned, 23 rupees stays as profit. Pretty impressive for a shipping and logistics company. Their assets also grew, reaching 758 crore rupees, showing that the company is expanding its base. However, their borrowings also rose, from 159 crore rupees to 256 crore rupees, mainly because they're investing heavily in fleet expansion. And then came the big move, the IPO of Shreeji Shipping Global Ltd in August 2025. Issue size, 410 crore rupees. Price band, 240 to 52 per share. Total shares offered, 1.63 crore. Listing date, 26 August 2025 on NSE and BSE. But why raise this money? Here's the plan. Around 251 crore rupees is going to buy Supramax bulk carriers, large ships that can carry way more cargo in fewer trips. 23 crore rupees is for reducing debt. The rest will go into day-to-day corporate needs and working capital. So, this isn't just about raising money. It's about gearing up for the next phase of growth. So, what does the future look like for Shreeji Shipping Global? On the growth side, the first point is bigger fleet. With Supramax vessels, they can tap into international trade more aggressively. Second, rising demand. India's push for more power, steel, and infrastructure means higher demand for dry bulk logistics. And finally, integrated model. Since Shreeji controls the entire chain from sea to land, they have a strong competitive edge over fragmented players. But there are challenges too. First is revenue volatility. In FY25, revenue dipped even though profits rose. If demand slows further, growth could be hit. Second is customer dependence. Over 60% of revenue comes from their top 10 clients. Losing even one major client could hurt. And the last is geographic risk, as they are heavily focused on Western Indian ports and Sri Lanka. Any disruption there, whether regulatory or regional, could impact business. To wrap it up, Shreeji Shipping Global is not a household name, but it's a backbone company for India's industries. From moving coal and limestone to handling complex logistics chains, they've built a strong and integrated business. Their IPO marks the beginning of an expansion phase: bigger ships, higher efficiency, and potentially more revenue. Yes, risks remain, like customer concentration and global demand swings. But with solid profits, a growing asset base, and a clear growth roadmap, Shreeji looks well positioned to sail ahead. The question for investors is simple: will Shreeji ride the wave of India's growth story or face rough waters in global trade? Only time will tell. But one thing is clear: they've got the engines running full speed ahead. So, would you invest in Shreeji Shipping Global? Share your thoughts below, and if you enjoyed this story, don't forget to like, share, and subscribe for more inspiring company journeys.